technicals. You want to look at charts? Bada boom, bada boom.
Still overweighted in single stocks.
34.56. That's your power pick of the day.
Welcome. This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. I'm Merlin Rothfeld with you for your Tuesday afternoon, and as we get one day closer to Thanksgiving, hopefully you all had a great day out there. If you're trading in these markets, you might have to go to the doctor and get some ulcer medication because today was a bit of a roller coaster ride. We started off doing nothing. I was teaching a class online this morning, had about 6-7 people in the room, and it was a perfect day to be teaching because the first hour or so of the market, 2 hours of the market, really nothing was going on, and then great free fall. It looked like we were going to start breaking through some lows. We came right into the closing price or the opening price of the day before and then came shooting back up. So really one of these roller coaster rides of a trading session when not a lot changed. Pretty much markets remain unchanged. Let's start off by taking a peek out at the S&P 500. TJ, if you would, let's do a 5-minute intraday. As you can see, that's the little roller coaster ride I was talking about. And I'll put a little yellow box around it to make it a little bit clear. This is kind of, even though there was an upward trajectory, it wasn't that great. It was kind of a little bit of choppy sideways action, a bit of a deterrent. And then you had this great sell-off after that, and then even better rally up, closing near the highs of the day, which is probably going to be giving a lot of you some optimism here, especially when we look at this daily chart of the S&P 500, and we sitting right at these levels, almost to 1,400 on the futures, looking for potentially another break to the upside. And as many of you pointed out, we are looking for, or at least I'm looking for, potentially jumping back up into this yellow zone up here, which would definitely be a nice little rally up for you in your long-term positions. So now we get my throat cleared here. For the final numbers on the day, you had barely unchanged. It was slightly to the upside out there, as you guys can see. This little green candle right here on the S&P, that's your positive force out there. Total up on the day was 0.07%, closing to 1,387 on the S&P, which would put us almost on the SPY 1/10. If we look at the diamonds, we'll look at DIA here. Diamonds were actually down on the day. It was 0.06 was the Dow Jones Industrial Average, closing to 12,788. And the NASDAQ, which is we'll throw our triple Qs up here for that one, pretty much unchanged on the day, closing up 0.02% to 2,916. A lot of numbers out there, but really what this is showing us is actually a fairly positive move. Since TJ has this chart full screen, notice the hammer pattern we had 2 days ago. What was 2 days ago? Friday. Last Friday, we ended the week with a very nice hammer formation pattern there that you see at the bottom on pretty good volume. Monday's session was a great bullish up day. Now today, we started giving back some of those profits. Things were slowly starting to drift down. It looked like we might actually come back at those lows as soon as we broke through yesterday's low, but didn't quite make it, and the buyers came in and closed this thing up on a higher note. So a bit of optimism closing this market, which leads me to believe that tomorrow will probably be an up day, although keep in mind volume should start to decline as a lot of people are taking off early for the holiday weekend, and I would basically say that Wednesday, Thursday, Friday, you should probably all just walk away from the markets and not do any trading. So that's our week. If you look at oil, surprisingly it was up. I know a lot of people wondering why USO was down almost 2%, yet the crude oil was up about 1.43%. Or sorry, not 1.43%. We'll go a little bit less than that. Oil was up, 1.43%. Got to get my numbers correct here on the show. I'm not sure why that happened. That's a question I got from a few people, is why do you have USO going one direction and oil in another? I don't know. Kind of a strange divergence there going on those two. What we do know is they'll come back to a mean and average and meet kind of in the middle there somewhere. A couple different things. John out in Indy, one of our regular listeners, he says, is the gold promotion going to be for this Friday as well? Yes, we are going to do the gold promotion on Friday. Of course, Friday's show will be a repeat. We're going to play probably tomorrow's show on Thursday and Friday so that TJ and I can actually have a life and go off and enjoy some time with our family. How about that, TJ? You want a life? I got 2 thumbs up. Normally he usually gives me 1 finger, but today he's giving me 2 thumbs, so that's a pretty positive sign. So we will be repeating the show on Friday, but you will have a chance to win that gold coin. I will be, wherever I'm at, I will pull the list of the gold coin winner, and we'll contact them in the beginning of the week. and let you know who won that gold coin. So if you haven't been on the show before, and we actually have a tax guy on the program here in a minute, so we can tell you what the tax implications are for winning a $200 gold coin on the air. If you would like to win that gold coin, go out to powertradingradio.com, click on that little banner up at the top. Actually, it's not little. I think it takes up about 33% of the page. Click on that, forecast what you think the price of gold will be by next Friday. You have until midnight on this Friday to do so. And, of course, you win the opportunity or get the opportunity to win a gold coin. So, yes, Joe out in Indy, thank you very much. We will be having that gold coin contest. I went and bought some more. They're sitting in the safe right behind us here. Well, behind the wall, behind Africa, and we have South America over here. So behind that wall, there's a safe with a bunch of gold coins in it. One of them could be yours. All right, Karen. Oh, Karen. I feel like a lot of people want to just listen to the show and think that they can get everything they need from this show and not ever take a class at the Online Trading Academy. That's not going to happen. And Karen, I think you might be baiting me for this one. The question you sent in is, I've heard you mention an all-star entry. What is it? My guess is you might actually be a spy for the XLT program. What the all-star entry is has nothing to do with baseball players. The all-star entry is essentially a setup. It's a condition. It's a series of parameters that we're looking for to make trades off of. And while you're looking out, many of you are out looking out at stock picking services and looking for somebody to tell you what to buy. What we focus on at the school is essentially a rule-based approach. Let's find specific setups that aren't questionable. They're setups that we look at and say, hey, this looks pretty good based off this reason, this reason, and this reason, and we end up with a high probability, low-risk setup. The All-Star entry takes into consideration several of the variables that we teach at the school, which is a lot of supply and demand components. We have some overbought, oversold components. We have a variety of different indicators combined to basically give you a cookie-cutter approach to finding trading setups and opportunities. That is what is the All-Star entry. And there's several different names that we like to use in the school, but All-Star entry is one of the easiest for people to identify and figure out and find in the marketplace. There's a bunch of them out there right now, and of course, that's about all I can say without getting in trouble with the XLT mentoring program or Online Trading Academy. All right, James, I wanted to go to your trade. I see a few problems with this one, buddy. I want to know where you're drawing these levels. I love how you wrote in here. He gave me all of his levels for U.S. dollar, Japanese yen, and he says, would you make any adjustments? Scratch the trade, take a Valium, call a psychiatrist? All of the above? Let's take a look at the U.S. dollar, Japanese yen here, TJ. USD, JPY. I'm not sure the time frame that you were looking at this one, James, so I brought it up on a daily just to get a better idea of the levels. And here's what he's got. He says, I've got a daily supply zone between 81.78 and 81.50, which is that kind of upper zone that I've measured out there. And I'll move your entry price. So there you go. There you go. Yeah, 87.8. So that's your supply zone, and I like it. That supply zone is fine. I see the way you drew your lines way back here, going all the way back to April, done well. Now you're short at looks like it'd be 81.60. Let me make sure I got your number right. 81.615. What I would have done here, and I'm not a big fan of the entry price that you got in, and here's why. Let's break this down to a 15-minute chart here, James. 15 MIN. Look where your entry price is. You got 81.615. So even though that was the zone on the daily chart that we looked at, I'm looking at the compression and consolidation that we had here, and it looks to me like this is the beginning of a formation called a bullish flag, where you have a big impulse move and sideways consolidation. So I like your stop. I think your stop's in a good place. I would have thought you would have tried to have gotten short somewhere higher up in this curve. You probably could have saved yourself a good 10 pips by trying to go shorter, deeper in that zone, going for a zone entry. As far as your targets, stop loss, I like it. I'll bring this back to a daily chart so we can understand that one. Stop loss, you have at 81, 88. I'll just leave it at that. That's fine. That's up above your high point up there, about 10 pips past the supply zone we saw in April, which is fine. You are going against the trend for sure here, right? We're looking for a counter trend reversal, which is going to be a bit riskier. Your target at 80.68. That's that line I have, the black line on the bottom here, which we'll get rid of those. It's fine, but where's that drawn off of? I don't see that really lining up with anything in particular. So what I did is I sliced this down into an hourly chart, and you do have a level that's much further down here than 80.68. There's actually one that's right here that would be better, right around 80. What do we call it? 80.80. So that would be target number 1 for me, and target number 2 would be back down here at the origin of this move, right around 80.26. So not bad. I like the trade. I think you're okay. I would just have a really tough time shorting U.S. dollar, Japanese yen. Just a real tough one because of intervention. As these guys do more intervention, which they're getting pressured to do, they're not giving in, but there's more pressure there for them to ease. You'll probably see this currency pair shoot up. So I definitely would stick to that stop loss and be ready to take a small loss on that one, James. All right, we're going to take a quick break. I've got about 5 or 6 questions regarding taxation. If you have questions regarding taxes, it's getting near the end of the year. Don't be that person who waits until December 28th to figure out what they need to do with their taxes. It's about planning, foresight, and making sure that we know what to do so we can look at Uncle Sam and in a very legal way without doing anything wrong, give him the bird and give him that one there and say, Uncle Sam, I'm taking as much as I can. You have all legal right to do that, guys. That's okay. So we'll have our guests going to be on here just a second to go over some of those questions and give you answers to the questions if you have them. If you have questions, Power Blast us out at powertradingradio.com. You know how to do it. Click the Power Blast button, send them on in. And no CDs today. We're giving away gold coins. I'm just in a giving mood. Gold coins is what it is. Forecast your price. We'll be right back after a short break on powertradingradio.com.
Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
All right, everybody, welcome back to Power Trading Radio. Merlin Rothfeld with you for your Tuesday afternoon. And as we look at this nice Power Trading logo here, my next guest has a face for radio, so we decided to put up a blue screen right here and keep it up there for the show. My guest today is Michael Atias from OTA Tax Pros. Michael, welcome back to the program.
Thank you for having me.
You know, last time we talked about preparation and making sure that everybody kind of plans ahead for the end of the year. And before we talk about planning or anything, we hear so much every day in the news about the fiscal cliff and taxes this, taxes that. I don't think that the average person actually really understands what it means to them personally from a tax perspective. Walk our listeners through what is the fiscal cliff going to do to them.
Well, actually, everybody calls it, believe it or not, it has a name. It's called Taxmageddon.
Nice.
So,
anything bad, we just add a Mageddon on it. We should have like Paris Hilton Mageddon.
Mageddon, yes. That's not a very good connotation. The reason they call it Taxmageddon is, as you all know, back in 2000, there was what we call the President Bush tax cuts that we've all enjoyed in the last 8 years, 10 years, 12 years, because President Obama has extended them. But we're getting to a point where we can't really afford to do that anymore. We couldn't afford really doing it to begin with.
Hold on. What can we afford?
Really nothing.
There
maybe
you go.
a can
Okay,
of soda,
so we
maybe
can afford
a can
to do
of
it
soda,
then.
maybe a Happy Meal. You know, that's maybe at best, and that's pushing it. But that point is that a lot of tax credits are expiring. Tax brackets are going up. Tax brackets are going to be canceled. That is if Congress does not reach any conclusion of a reform. I know you find it hard to believe that Congress cannot reach a conclusion. But,
I am dumbfounded, actually.
Dumbfounded, I know, but it could. It is a possibility that they will not reach a conclusion, and then what happens is we go to what was, and that was, ladies and gentlemen, back in 2000, about 12 years ago. So, for example, your 10% tax bracket is going to be eliminated. Child tax credit, if you are worthy of having it, I myself am not, you only get, instead of $1,000 right now, $600. And the list goes on and on. So on average, I've seen some data out there that on average, the average American will pay about $5,500 more in taxes. That's a lot of money. Of course, so those of you who are in lower brackets, you'll pay more taxes, not so much as $5,500. So it's very important to do some tax planning before the end of the year. And I think you told me a story about Walmart today you want to share with the listeners?
Sure. I talked about it yesterday and I thought it was kind of interesting. You talk about tax planning. I mean, look, we're talking with Mr. Atias here. Mr. Atias, I can't believe I just called you Mr. Atias. Talking with Michael about tax planning and maybe saving, $500 here or $1,000 there on our taxes. Remember yesterday's show I was talking about how Walmart, their dividend that they pay usually in January, well, the board of directors, whomever there, said, we're going to do it in December because if we do it in January, we're going to be in a totally different tax bracket. Cool. And that minor adjustment, we're talking less than 30 days early on their dividend payment, the Walton family will save $1.5 billion. That is no chump change.
That is no chump change. Now, I can't guarantee we'll save you $1.5 billion because if you got $1.5 billion, you probably have an army of attorneys and tax attorneys and whatnot. But we can still save you money. And the reason that Walmart made that decision, Marilyn, is simple. At the end of this tax year, the dividend rate is jumping back to ordinary income. Ladies and gentlemen, for the Waltons, it's 39.6% under the old tax rules.
As opposed to 15.
As opposed to 15
so
or
it's
below
half.
that if it's qualified dividend, which for them it would be.
Wow.
So we're talking about massive tax savings. Now, that's why a lot of people right now are selling long-term investments because long-term capital gain, some of you are out there are not maybe actual traders, you're more investors. So you're going to look into your long-term trading and think about selling some of your positions. Now, why is that? Because the long-term capital gain rate is going to move from 15% to 20%, and actually can move higher than 20%. It depends on your overall income.
Wow.
Because then we have the new, they call it Obamacare or Medicare. That's another 3.8 surcharge on top of that. So you can looking at actually up to 24% potentially, depending on your tax bracket. And that's why you see a lot of people are trying to do this move, because it's a 9% swing.
Yeah.
And so for the Waltons it's 1.5 billion, but for you it may be a couple of thousands of dollars. So you want to look into that. Of course, keep in mind, this is no financial advice. You may hold to the stock or to the investment and make more money from stock appreciation than the tax savings. So you got to take that into consideration. But definitely people are doing some tax planning.
You know, for me, when I look at the statement that Michael was just making here, guys, it's twofold. Number one, some of you have legacy positions you might have been holding for a long, long period of time, and you're thinking, okay, great, it's long-term capital gains when I sell it. But if you sell it now and it's only 15% tax on that, that's one thing. If you sell it on January 1st, it could be 20% or higher. That's an extra 5% increase. And while that may not seem like much, obviously 5% is something you want to keep for ourselves. For me as a trader, let's start thinking about what the implications of this might be as more people understand the rules. If people start selling long-term positions, what do you think is going to happen at the end of the year? It's going to be what we're going to call an inverse Santa Claus rally. It will be a Uncle Sam rally, which means markets are probably going to tank as people start to sell off more of these positions. So something to think about. You got a trading perspective, and then you have the taxation perspective, which, you know, from a planning point of view, we should all be thinking about that. And you know, a lot of people, Michael, have holdings. They don't know what it is, and I'm guessing, because I know some personal friends that are in the situation, they just have all these documents that go, yeah, well, I got this, and I got some of this stuff. I don't really know what it is. I just have net worth of X.
Right. So what they should do is very simple. They should, you know, call their brokers or go to online accounts, print their unrealized gain and loss report. I repeat it again. It's unrealized gain and loss report. These are basically positions you have not sold yet, and you'll see on paper what your gains are. And you bring it to us, we can sit down with you and tell you what are the tax ramifications specifically for you and how it affects your tax situation. We have a client, Marilyn, that has Apple stock he bought way back when. Some of it bought at $9, $11, $15, right? Everybody's like, who is this guy?
Yeah.
And he's sitting on $1.1 million of profit. Now, to him,
it dropped 25% over the last 2 months. But
yes, so I don't know if he sold it or not. He was kind of adamant about selling it. And I told him, listen, it's your decision. But if you sell it now and your gain is about $1 million, or yes, it was about a few months ago, we're talking about $50,000.
Yeah,
that's a difference in tax.
Yeah.
So you can buy that stock again if you believe in it so much. You can buy an option.
$50,000 more of it.
More of it, actually. So you got to think about that. So what we recommend is get your statements from your brokers, print them out. Contact us. We'll give you some information how to do that. Contact us. We'll sit down with you and tell you what are your tax ramifications, what are some of the tools you can do, some of the strategies you can deploy before year end.
Well, since you mentioned that, TJ, let's bring this one up here. We'll talk a little bit about this early on. Last time we had Michael on the program, he was working on building a taxation course because of demand. A lot of people are asking, I want a class on specifically taxation. There's a free workshop coming up Thursday, December 13th, as you guys can see it on the screen here. I think you can. I'll make it a little bit bigger here since we have that. There, look at that technology. Left-hand side, if you go to OTATaxPros.com, you'll see on the front of the page there's a free workshop December 13th from 3 to 4 p.m., and then Thursday, December 20th from 3 to 4 p.m. So you kind of have back-to-back Thursdays from 3 to 4 p.m. Pacific time, I presume, correct?
Pacific. Yes.
Pacific time. So those of you on the East Coast, that'll be in the evening from 6 to 7 p.m. And for those of you around the world, you'll have to figure out what the clock is because I can't do it right now on the top of my head. If you are looking to talk to someone on the phone, you can always contact them. The number is on that page as well at OTA Tax Pros. The phone number there is 855-682-7767. That's 855-682-7767. When we come back, I want to talk a little bit more. We have a lot of questions coming in, Michael, regarding some specific situations. A lot of it having to do with entities, setting up corporations, and maybe it might be in the interest of some individuals to open an entity. We'll talk about doing that maybe before the end of the year and finding ways to shelter a little bit of money away. Remember, at the top of the program, Mike says I was being a little bit feisty. Look, there's nothing illegal about trying to put your money in the right places where it's allowed to be under the tax law. And most people have no idea. I'll give you a good example. When I lived over in Europe, my old CPA didn't tell me anything about living out of the country. My new CPA that I switched over said, oh, you've been living out of the country? Do you know that if you live out of the country 11 months or more, you get 100% of your federal income taxes back? I said, really? That's a lot of money. And I think the right person that knows that specific tax law, those types of things become very, very important. I didn't do anything illegal. I just followed the rules of the tax code. So let's get you guys some help on that one. If you have questions for Michael Atias or myself, Power Blast is out at powertradingradio.com. And with that, we'll take a quick break. When we come back, we'll dive more into taxation. Send in your questions. We'll be right back.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at powertradingradio.com.
Welcome back to Power Trading Radio. Thank goodness for all of you concerned that we mute these microphones on the breaks, because you would have heard Michael Atias singing TLC. Yeah, just a wonderful melodic voice. Thank goodness he does taxes, because his stage presence is absolutely awful. Michael, before...
Yes. Thank you for the vote of
Now
confidence.
I throw you under the bus.
I thought
there.
I still have a chance. I was going to American Idol, but I don't think it's going to happen now.
No, America's Got Talent, no. No, but America's Got Taxes, you could be the
I
star.
can do that. Okay, I can do that.
He's the star. Last time you were on the program, you mentioned that we actually had you on several months ago, almost a year ago, and we were talking about planning and taxation, and we drove people to some workshops you had, and there was such a demand for it that you had mentioned that you were starting a class, you were building a class. I haven't been in this class. Tell me a little bit more about your class. What is it? How long is it? How do they get in touch with it, and what do you do?
The class is great. It's basically, first of all, it's online. It's 3 days, consecutive days, and each day we spend about 2 to 2.5 hours in an online environment where 80% of it is teaching. I talk about different things that you're interested in. Who can qualify as a trader? What if you don't qualify? What are some of the strategies you can deploy? What about setting up corporations? The strategies of using corporations. Who should use it? Who shouldn't? What state should it be? Should it involve your spouse? How much money you need in the account? How many trades you have to make to qualify as a trader? All of the questions that everybody's very interested in, we're going to take a deep dive into that. We follow that. We talk about retirement accounts. We talk about some of the falsehoods in retirement accounts and how you can correct that. We have great products and services to offer you there. So it's a whole 6.5 hours, 7 hours of a class, which comes with it is also a personal consultation. So any person who's registered for this class will have to sit with, will have the ability to sit with either me or one of my staff for an hour or less, and we'll talk about your situation, including analyzing your tax returns, your last 2 years. That's part of the package. We'll tell you about what are some of your options if you qualify now. Maybe you'll qualify in the future. There's a sense of urgency. A lot of people ask about, the number one question we get is, what about my education? I spent $5,000, $20,000, $40,000, $50,000 on my education. I want to write this off. So the answer is simple, but it really is a personal answer. It's a case-by-case basis of who can and who can't, and there is a sense of urgency of when you can do that.
It's kind of how you set yourself up. It's almost like, how do you create your tax identity?
Exactly.
Are you an identity as I'm Merlin Rothfeld, or I am Flysuit International? What do I do? And
exactly. The structure is very important. And if you don't get the structure right, and if you don't do things right, the ramifications are severe. Mainly it's money, but it can be involved more than just money. You can get involved with an IRS audit. That's very time consuming. It's a lot of pressure. Costly. It's you lose, you see I don't have any hair anymore. It's because of representing people. But it's very stressful. So if you do things right, you're not going to have issues with the IRS. And if you do, you're going to be prepared. And that's the key. 80%, I tell this in class, 80% of audits, personal audits, result in a loss of the taxpayer. And then the average payout from the taxpayer is about $8,000.
Jeez.
And you know what the number one reason is that people lose?
What?
They didn't set themselves right. They didn't have the right documentation. They didn't know how to compile everything into something that makes sense. And we see that all the time. We are actually now in the process of representing a gentleman who did everything on his own. I mean everything. He set up his own company. He did his own taxes. Then he got audited.
Is his name Merlin?
Okay,
it sounds like
no,
me.
His name is not Merlin. He did his own taxes. Okay, I can't disclose the name. He did his own taxes. He got audited. Of course, he showed like $80,000 of losses every year. Crazy. Half of the expenses don't even have any legitimacy. Whatever. Not to waste people's time. But the bottom line is, he even went and represented himself. And now he's facing an $80,000 tax bill. We're going to try and help him out. And I think we can help them, but I think the situation is pretty dire. Now, I don't want you to be in this situation. I don't think everyone is in that extreme.
No.
But it's very important to do things right. I mean,
it's the same thing. It's the same thing when I teach people trading. It's like, look, you can go and read the books and try to do everything yourself, but when you have a mentor or somebody helping you along the way, then that initial phase of setup, understanding, and education is out of the way. You know you're going to do things the right way. So even though as a trader you might take some small losses at the beginning, you know that you're headed down that right path. And with tax, it's weird. I would say it's even more personal. It's more about each individual person than trading might be, because we have several different paths you can go down from a trader's perspective, saying, I'm going to be a position, swing trader, day trader. With yours, it's not just what do you do for work, it's what do they do, how much do they make from trading income, what sort of deductions and kids. It's much more complicated.
And that's why in part of the class we give you that personal consultation, because you're going to get a lot of information in the class, so when you come to the consultation, you'll have the right questions in mind. And if you don't know anything about anything, you're going to ask, maybe not important questions.
Right.
But after you learn, you're going to ask questions that are tailored for you. And that's part of this class. Now, this class is on, like I said, we usually have once a month, but sometimes twice a month a class. It's at the leisure of your home. It's recorded. You can listen to as many times as you want, and it's lifetime. So if you want to take the class 6 months again from now because you want to hear about the updates, it's a great value to have. I mean, it's a lifetime class. So
absolutely, and even if you're not, if you are doing your own taxes, it's certainly probably one of the more important things you can do from a planning perspective, at least understanding where you're going and where you're headed with the financial stuff. So if you're interested, register for the free not half day workshop. It's
it's
1 hour.
Only 1 hour, okay.
Depends on whose day.
And
I have shorter days.
Okay.
So we have from 3 to 4 p.m. December 13th to December 20th. That's a Thursday afternoon. 3 to 4 p.m. Pacific time. If you're on the East Coast, obviously that's going to be 3 hours after, so 6 p.m. to 7 p.m. That one is free for everybody at OTATaxPros.com. When we come back, I got a really good question. Harold, I feel good about this one because he says he had one of his best years ever, and he gives a lot of props to the show out there. So Harold has some questions about how we might be able to keep more of that money for himself. I think you gave some good insight with the fiscal clip. We'll look more at that when we come back. Harold and Mike, we also have your questions coming up here. If you have questions, powerblast.powertradingradio.com. Michael and I would love to hear from you and get to the bottom of all your tax needs. We'll be right back after a short break.
This is Power Trading Radio Live. Real people, real money, real trades. Visit us online at powertradingradio.com.
Welcome back to Power Trading Radio, everyone. Merlin Rothfelder with Michael Atias of OTA Tax Pros, and we're talking about the need for preparation. It was funny. I was actually laughing when you made the comment about you have this guy and he's doing his own taxes. He's doing everything himself. I started my own corporation. I used to do all my own taxes and all that stuff myself, and I can definitely say it's worth it to spend the money and have someone do it for you. I messed up on mine. I did a full C corporation, which I didn't need to do, and it was just cumbersome. I did all these filings all the time. It was a bit of a nightmare. So in hindsight, obviously everything's in retrospect at this point, I wish I'd done it the right way and probably had you around because I would have had you do my taxes
I
for
wasn't
me.
born by then.
I look really good for. I said I was 14 on the break.
64?
No, that's a Beatles song. Sorry.
Okay.
I do want to go to a question from Harold, though. We have a great question came in from Harold. I love it. It's always nice when you get positive feedback. I'm not sure whether Harold was a student or not, but he says, thanks for the great show. I've been following a lot of your analysis and have had one of my best years ever. Fantastic. There's multiple parts to this one, but first part says, what would you recommend to preserve more of my earnings? Should I or can I open an entity by the end of the year? If so, which is best? He's made about $100,000 in profits this year from trading stocks and futures, which he says is about the same of his salary. So congratulations. That's a heck of a nice added income bonus there,
Yes.
making $100K.
Definitely.
Can he open up a corporation by the end of the year, and should he open up a corporation?
The answer is anyone in America can open a corporation. The question is, do you need it? Is it going to be beneficial for you? And let me do this analysis. So what are your options? You could file as an investor, you can file as a trader, and when you file as a trader, you can either use a sole proprietorship or you can set up yourself as an entity. So you have a few options there. Obviously, the best setup would be to be qualified as a trader, and assuming that you are, let's just assume that you are, you can do it on Schedule C. The benefits, let's start with the benefits.
Okay.
The benefits of doing a Schedule C or a sole proprietorship is it's simple and it's cheap because it's already part of your tax return. So you may end up spending a couple $100 more, $200, $300, $400, $500, depending on how involved it is on your personal tax return.
Right.
And that's about the only benefit you're going to get. That's it. Simple and cheap. But the disadvantages, and I'm going to name just a few. And this again, all of this content is in our class. Let me mention just a few because we don't have 3 hours today. One of them is that Schedule C is the highest audited form. Okay, let me repeat that. It's the highest audited form. That means you're putting yourself in jeopardy of asking the IRS, hey, I'm here, you want to audit me, please audit me. And even so someone told me once, but I'm right, all my expenses are legitimate. It doesn't matter if it's legitimate. You're putting yourself in harm's way. You don't want to do that. You want to be smart. You don't want to be right. So that's one big drawback of using a Schedule C. But beyond that, let's say you're not afraid of that. Let's talk about dollars. Let's talk turkey, right?
Okay.
We're coming about Thanksgiving, right? Gobble, gobble. So let's talk turkey. When you set up your entity, you have the ability to do a lot of other options, like creating your own retirement account, which you can actually trade against. You're actually paying
like
money.
Like a 401k?
401k
right.
or an IRA, depending on what's suitable for you. You actually, basically, what you're doing is you're taking money away from Uncle Sam. You're not paying tax on that. You're putting it in a retirement account, which is basically yours. You're trading it. And the gains inside this account are tax-deferred or tax-free, depending if it's a Roth component or a non-Roth component. So this is a strategy you can really only do with a corporation or with an entity, because only through that you can pay yourself a salary. You can't issue salaries with Schedule C. You can't pay yourself. That doesn't work.
You already paid yourself.
You already paid yourself, right? So the only way you pay yourself is by having a separate entity. The entity is a separate legal entity. So therefore, it can pay you. That's like everybody else. This gentleman says he works for a corporation, so he's an employee there. Just like your company there is paying you salary, the same thing, only this time you also own the company. So that's one of the techniques. And later in our third session of the class, we develop of the different type of retirement accounts, the differences between them, which one would be more preferable to you. And some very little known secret, we talk about how to actually structure that 401k to give you the maximum amount of flexibility. So definitely I recommend if someone qualifies to go that route, but it's not for everyone.
Yeah, and I think it goes back to what we talked about in segment number 1. Harold, there might be educational expenses you incurred along the way. There's specific things you might want to deduct, or things like space in your home that you can write off. There's a lot of different
stuff,
pieces,
yes.
and I think that's why Michael was talking about having a consultation, and consultation's free. Am I right?
The consultation, no. The way we work
Make
is
sure I
this.
get my wording right here.
Okay. The consultation is part of the class. So if you register for the class, you get that. Now, what we have on Thursday, December 13th and December 20th is an introduction to the class. So you can already call us right now and say, you know what, I've heard enough. I want to be part of this class, and we'll give you all the information of the following dates. We actually have one next week on Tuesday, Wednesday, and Thursday between 3 to 5 p.m. Pacific Standard Time. So there's still enough time to register for that one. But if not for that one, we have another one in 3 to 4 weeks. And that's part of that. The webinars are introduction to the class. They are free. So anyone can join it. Bring your friends, your family, whoever you want. The class itself is a paid class.
Okay. So if you want more information, TJ, throw this one up here. This is OTA Tax Pros website. You guys can get some good information on the website about the course and about the half-day, I keep saying half-day workshop. Talk about being trained to do something. The 1 hour workshop, December 13th. He's adamant about that one. I'm cutting it off in an hour. December 13th and December 20th for an hour. You can register for free at otataxpros.com. There's also other information about the company. If you're interested in that class that he mentioned, the number is 855-682-7767. That's 855-682-7767. I had a couple questions coming in. We have a lot of listeners that are north of the border, Canadians. Do you do Canadian tax stuff?
We decided not to focus on Canadian stuff, Canadian taxes yet. There's enough Americans here, so we focus on U.S. tax law. We do deal with international, but that's mainly if somebody lives like you had your situation where you live abroad. So we talk about, the foreign exclusion and some of the costs you can write off if you live outside of the United States. So we do that. We have clients that live outside the country, but we don't do Canadian taxes per se.
Okay, it was interesting. We had a question that came in, and one was on specific Canadian taxes. Another one was interesting. It talked about, can a Canadian person, open up a corporation in the U.S. and get away from paying taxes in Canada? And of course you can. Everybody can open a corporation.
Any person can open a corporation in America.
But you're still going to pay taxes here because Uncle Sam says, pay up. We've got deficits to run. We have a misappropriated budget, and we need to run this country into the ground, so you're going to have to pay us for that privilege. That's pretty much what they're going to do. So even though you're saving taxes on your income in Canada, you still got to pay for it in the U.S. Can't get around that one. One of the areas that always comes up is, moving to a different location or opening your business in a different location. I know California right now is really cracking down. Some of the laws just passed saying that even, if you're out of California and your business is in California, you're doing a lot of business here, still have to pay taxes on that. What about Nevada corporations, Delaware, Texas, areas that have no state income tax?
Right.
Is that something you cover as well, as far as where I should set this up?
Yes. First of all, we help people, after the class, we help people if they want to set up a company. We also help them with that. We offer that service so they get everything done right. So not only they learn what is right, they actually also execute what is right. And we incorporate you in all 50 states. Now, a lot of people say Delaware, Nevada, Wyoming is a new star, a rising star. Where should I do it? We generally recommend doing it in the state that you live. Like you said, though, there are some states that are crazy. For example, in New York, if you're setting up an LLC, one of the issues that they want you to do is to publish the fact that you have an LLC. And if you live in New York City, that publishing cost can reach up to $2,000. That's
to
insane.
Publish it?
Yes.
Why don't we go to a newspaper, an LLC publishing newspaper?
It's going to that business.
That's a good business.
On the other extreme, let's go to the other coast in California. They want you to pay every year a minimum of $800 for having the privilege of doing business in California.
What an honor it is.
It's an honor. Now, a lot of people go and do their companies in Nevada, and they say, can I do that? I say, yeah, you can do that. You got to be careful of how you do that. Okay? We're not going to provide on the air right now the methods of how to go around that, but it's just that you can. You're taking somewhat of a risk. But the California questionnaire has about 100 questions that if you answer one of them yes, that means your company has to be registered in California, and they will want $800. And we have a famous individual that works for us, we're not going to mention his name, that had a company for years in Nevada, and his spouse accidentally mailed the registered agent check to the franchise tax board, and that's how they found out about him. And they said, we want 3 years of this $800. Oh, and by the way, you're late, so we're going to penalize you 50%.
Isn't that great?
And there's interest and whatnot. So 3 years cost him $5,000. And not only that, from now till forever, he has to pay the $800.
I tell you, I made a mistake on mine because I was living internationally, and I made a mistake with California. And here's the scam that the state of California pulled on me. Every time I paid what I owed them, by the time the check got there, they said, you owe us more. And now we're adding late fees. And I said, this is never going to die. It's
right.
never. And
you have to pay them like a little bit more to finish it.
It was nuts. I said, if I mail it today and it gets there tomorrow, I'll overnight it. How much would I owe you? And finally, I got it resolved. Nightmare. Look, we're out of time here, guys. I've been with Michael Atias talking about taxation. The end of the year is coming very, very close. Of course, if you are Mayan and you believe the end of the world is going to end on December 21st, then forget everything that we've been talking about
Don't worry
today.
about it. Spend all your money.
But if you're a human being that realizes that back in 1986, Nostradamus also predicted the end of the world and nothing happened, then you realize life will continue as normal. And what that means is Uncle Sam is going to tax you as much as they can. If you want a way around that, want to find the loopholes, and nothing illegal, we're just saying the holes that the system has put in place for you to take advantage of, you can contact us here at powertradingradio.com. I also have the webpage up here at OTATaxPros.com where Michael Atias and team have a class online. It's an online class where you can learn the ins and outs, figure out how to custom tailor something. With that class, you also get a free consultation and see how we might want to structure, or you might want to structure, your personal tax situation to benefit you in this coming year. Fiscal cliff is coming. You might want to plan now. The sooner you do it, the better. If you want to know more information, call us at 855-682-7767. That's 855-682-7767. That's OTATaxPros.com as well. Michael, thank you very much for being on the program today.
My pleasure. Always.
And good luck to you. I have a feeling you're going to be totally flooded this holiday season.
Yes.
All right, everybody, we're going to take a quick break. When we come back, I got all your economic news for tomorrow, which will pretty much be a light one as we roll into our Thanksgiving holiday weekend. We'll be right back.
Power Trading Radio Live is back with a look at what lies ahead for the next trading day and today's Power Pick.
Welcome back to Power Trading Radio, everyone. Wrapping up our Tuesday edition. Hope you all enjoyed that one. I can't emphasize enough how significant it is to start thinking in the future for your taxes, as we know that fiscal cliff is coming, and that was kind of interesting. Long-term capital gains can be bumped up to potentially 20% or higher, which means that if you're holding positions, if you decide to sell those down the road, you could pay 5% extra. Therefore, it would make sense to sell it today, pay the taxes on it at 15%, buy it back January something and save that 15 or that 5% in taxes. Of course, that's just one small little piece having to do with the fiscal cliff. Michael Atias was giving us some other pointers as far as where we want to incorporate and a few other pieces. Jonathan just sent a nice question saying, do you have to have a resident agent? No, but if you're not living in the state, you need someone there to answer mail and keep track of all that stuff, maintain an identity for you. Therefore, you might need to pay for a resident agent. And for Ginny out in Detroit or Kentucky, I'm not sure where she's at, she's saying, where do I get more information? How much is it? Do they come out to Detroit? The class is online, so you can watch it from wherever you're at around the world, even your little mobile devices, I guess. But you can participate in that class online. You can get all the information that you need at OTATaxPros.com. That's OTATaxPros.com. And Michael and his team will help you out with any questions you guys have on that one. So good luck. Uncle Sam can be one stubborn dude, and he's coming up here end of the year, and he wants his money. All right, let's look at our economic calendar for tomorrow. Our Wednesday edition, as we walk into this Thanksgiving weekend or week. Unemployment claims coming out at 8:30 in the morning. That's one of the major ones. We saw the last number spike up a bit. My guess is this will probably follow suit. Seeing a lot of people doing layoffs right now. At 9 a.m., you have flash manufacturing, and then at 9:55, University of Michigan consumer sentiment. They're expecting upwards of 83. I don't buy it. I think that University of Michigan's sentiment report is way out of whack, but a lot of people pay attention to that one. And at 10:30, crude oil inventories. We saw a nice little pop in crude oil today, or with the crude oil price up about 1.5%, which is nice. Of course, we'll see if that continues up here for tomorrow as well. If you're trading the pound, you have public sector borrowing, and that's pretty much it from the economic news. If you're looking at earnings, John Deere & Company coming out with earnings, and that's going to be, I believe, pre-market, so we'll keep an eye on that one. By the way, did you guys catch Best Buy? Playing taps for that one. They're going bye-bye, way the dodo. As far as guests go, tomorrow I believe I'm going to be all alone in studio. I may see if I can get one of the instructors to come up and join me. So I'm going to keep it open. We'll keep it a holiday show, light and fun. If you have questions, Power Blast us out at powertradingradio.com. And next week, guys, we're going to have Joanne Farley, awesome instructor for the XLT program and one of the backbones of the whole XLT program. Debbie Haig, Corey Lane, John O'Donnell will all be on the program to talk about options, futures, equity markets, and all sorts of other trading vehicles. So we'll see you guys then. We'll see you tomorrow, actually, on powertradingradio.com. Take care.